All right, well, let's get started. So first off, thanks for everybody being here on a Saturday. So spend a little bit of your time here on a Saturday with me. And again, I like these Saturday events because, the markets are closed. It's been a pretty crazy week this past week. And so we can just kind of kick back and talk the markets. And what we're going to kind of dive into today are, how to trade seasonality trends using spreads, options, and option pairs. So get a notebook, get your beverage, and kick back, and let's get started. Now, if something happens over and over for many, many years in a market, wouldn't knowing how to identify and use this occurrence significantly benefit your trading success? Well, the big hedge funds know all about this, but you should too. And once you do, you're going to be easily able to use it and increase your own trading success. So seasonality is just an amazing thing to add, to support your trading, to help you see new trends coming up before they actually develop. So that's what we're going to get into today. I've been using seasonality. My career, actually, just a little background, started back in the 80s on the oil side. So I was fortunate to get in with a company called Coastal Corporation. They actually had a training program where they would, take guys in or women and actually train you to trade. And so trade crude oil and oil products. So they had a bunch of refineries and just a lot of trading. So it was pretty exciting. So I was able to get my foot in the door back there in my mid 20s after I got out of college, and spent about 5 years there. They first off sent me to one of the refineries down in Corpus, Texas for about 3 months. And that was great because, you learn the process of oil, how it goes through. So the kind of the fundamentals. So that's a really great thing for anything that you're doing, and learn the fundamentals first. Then was able to get into the tanker shipping department, learned all about tankers and shipping and chartering, all that stuff. And then finally got into the cargo side of crude trading and started out and never looked back. So sent me out to Singapore a couple of years, traded products and crude out there. And then back, mid 80s, a company called Transworld Oil, I got a job there, which was unbelievable because at that time they were the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. And so, spent about 17 years with Transworld, and about 16 years of that out in Bermuda, which was their corporate headquarters, and ran the international trading desk from there for 10 years. But a big part of our trading was really centered around seasonality. So, every year I'd have to do my, kind of trading plan for the budget and all that stuff, and you have to have the boss approve it. And so it was all, every time I did my plan, it was all based on seasonality. So for, trading energy and a lot of the different commodities, it's such an important part of your trading is to see what seasonality occurrences are coming up and try to, use that in your trading. So we'd always, talk about as catching that wave, that seasonal wave. So that's what we're going to touch on here today. So the following presentation is purely for educational purposes. Any stocks, options, or futures mentioned does not constitute advice and should not be construed as a recommendation. 1 second here. Okay, Keith Wade. Okay, I'll check that out. Now, the fundamentals of seasonality is when you're using seasonal tendencies in trading, it's designed to anticipate future price movements rather than constantly reacting to an endless stream of often contradictory news. Now, although numerous factors affect the markets, certain conditions and events reoccur at annual intervals and affect the markets to one degree or another in more or less a timely manner. So perhaps, the most obvious is the annual cycle of weather, from warm to cold and then back again to warm. So that's such a big, huge seasonal trend. Everybody understands that. Now, in commodities, though, we can look at trading commodities with a lot of seasonality. So commodity prices typically reach peaks and lows during certain times of the year. And again, this is primarily due to production cycles, buying cycles of commercial users, around the world. So it happens in a lot of different things. In the chip industry, you name it, there's some kind of cycle that will go on. So there'll be, times during the year when supplies are at their highest and demand is at the lowest. And then these are general trends, but there are obviously more variables that determine the market price than just that. Now, so whether you're trading stocks, commodity futures, commodity spreads, the odds are that seasonal tendencies will be one of the best and most consistent tools that you can use in your never kind of, I call it, ending quest of trading profits. So these seasonal tendencies should, be used as just kind of a part of your overall trading plan or process for selecting the highest probability trade. So that's how I go about it. I always want to know if there's any major seasonal trend coming up on the horizon, and I want to use that to support perhaps, certain trades that we're looking at. So I'm always conscious about the seasonal tendencies. Now, many of these seasonal trends are going to repeat 87 to sometimes 100% of the time each and every year. So some pretty amazing statistics. And these seasonal trends, when combined with directional cycle models and price momentum, will help to create huge trend trading opportunities that can literally make your trading year. So that's, kind of the one thing that we were always looking for, is that big wave. And literally you could have one or two of these trades make your full year. You get on that trend and you go. So then it comes down to, how do you catch that seasonal wave? Well, there are a couple of steps that I want to kind of highlight here today. So first off, forecasting price direction by using momentum. I like to use momentum to help kind of forecast the direction. So using that with kind of a timing cycle model that I've created really helps to, spot breakouts before the breakout happens. And so this will help you catch the seasonal wave. So what I like to do is, use these indicators for cycles and momentum, and then apply that and align it with seasonality that's coming up. And it really creates a really great trading process, that you can incorporate in your trading. Now, by using seasonality in your trading, it can be thought of as looking to spot that perfect wave. So if you've ever, looked at wave boards, or catching a wave or surfing or things like that, you're always looking for the wave. Now, once you catch that wave, you want to stay with the wave, stay with the trend until it ends. So these seasonal trades may happen sometimes only once a year or twice per year in a single major asset class. But when you're scanning multiple markets, the trading opportunities really become great. So, we can scan and look for seasonal trends that in the U.S. equity markets, the bond markets, energy, gold, silver, copper, platinum, forex, real estate, agriculture. These are seasonal tendencies that happen all across the board. So then it gives you a big, kind of a list that you can work from. Now, step one then is, predicting the price direction. So I'm, a big user of cycle trading tools and models that I've developed that are based on momentum to help you kind of spot the ups and downs and changes of cycles. So this is a really important part for, helping you, plan or predict your price direction. So then seasonality plus momentum is kind of what really kind of backs this up. Now, all markets and timeframes are typically trade in cycles. So, when we're trading any type of market, we're going to look at, it's all about the price direction, and then seasonal momentum, timing, and then managing your risk. And the best trading tools for signaling price direction and market timing, when combined with seasonality trends, comes down to using momentum flows. So momentum indicators, what they do is they measure price strength or weakness. And when you're using it across multiple time frames, measuring multiple time frames, it really helps to create kind of a dynamic trend cycle indicator that can help you to identify new seasonal trends early. It will help to really validate the strength or weakness of a potential seasonal trend. And then what that'll do is then help you keep in a seasonal trend to maximize your profit. So if you have a really strong momentum on a lot of different time frames, supporting potentially a seasonal trend that you've spotted, it'll help your confidence to stay with that trade, for a longer period of time. So to navigate a seasonal trend and time market entries and exits, you really need some kind of trading tools that can help you to identify a market cycle turning point. So what I've used and I've designed is a rule-based kind of system that highlights the intrinsic rhythm of the market, is kind of what I call it. So the system is based on a repeatable trading process, clearly defined, and uses a directional cycle timing model, momentum flows, and then fractal analysis, which is kind of multiple time frames, moving averages, and Fibonacci support and resistance. So this combination really helps to put together a really good process for trading and identifying and staying with trends. Now, step two is then timing, that timing, that what I call the timing edge. So by incorporating multiple time frames, what this does is provides clarity to an overall seasonal trend and should be used for your day trades, swing trades, and spread trade entries within a seasonal trend. So, what we're looking for is the longer term time frame first, and that's going to allow you to see that big picture in order to get the clarity of a seasonal trend or the sentiment that may exist. And then what we're going to do is use the shorter time frames kind of to align and support with the general seasonal trend to show the trend strength or weakness. And then these lower time frames or shorter time frames are used for actually plotting the entry into a seasonal trend. Now, you're never going to get the whole picture of a trend by just using one time frame. So that's why it's important to incorporate multiple time frames, or what's kind of referred to as fractal analysis. Now, step three is then to identify, how do you do that? How to identify and trade the seasonal breakouts before the breakout. So what I do is I use some really great seasonal statistics and seasonal patterns to help kind of see a seasonal potential trend that's coming up. And then I use my cycle model, the power cycle trading model, and momentum flows to help align and get you into that seasonal trend at the right time. And then we're going to use, a lot of times I like to use spreads and even options to trade the seasonal trend. All right, so that these can be used to manage your risk, to reduce the risk, a lot of different things there. So first off, let's take a kind of a quick market review and look at the seasonal patterns and the momentum that's coming up. So first off, here's a kind of what I call, these are continuation kind of seasonal patterns. And we're coming to the end of a pretty strong seasonal trend. When we get into the first, like 3 weeks of July, this is a super strong seasonal period of time. And we've had a great move to the upside, on the markets. Now, we're right about here. So you can see we're pretty much close to the top of this particular seasonal trend that this data going back 5 years, 15 and 27 years. So we're very, very close to the top of a seasonal, kind of a turning point. It tends to kind of happen right about where we are, the 20th to the 28th of July. Okay, so that's on the S&P. This is the September continuation series. Okay, and then the NASDAQ is pretty much very, very much the same. So here's the NASDAQ. We're currently right here. So we're, not much left on that seasonal trend up. Now we've actually shifted down already to the downside, obviously this week. But you can see the alignment and the support for seasonality is kind of no longer going to be with the market. Be a kind of a tailwind or behind the market support. So this was a great period here. We had that supported seasonality that first 2.5 weeks of July, but now we're going to run out of that. So that's going to, sets another circumstance for the market. We're already starting to turn over. Now we don't have any seasonal strength. So this could get, potentially, pretty ugly, I think. So that's what it looks like there. Now, crude oil is very similar. You can see here's the crude oil. This is the October contract. And it has a little seasonal potential push, a little bit left into the end of July right here. And then you see it pretty much kind of goes sideways to down. And then we'll have another kind of end of the summer seasonal surge as we get into Labor Day. So, we've run out a lot of seasonality here for the equity markets. The crude oil market maybe has a little bit more to go, but that's kind of an overview of kind of some of the central markets that we like to look at. Now, the next thing we're going to do is, always do what I call top-down market analysis. So, I like to do this a couple times a week to kind of keep yourself, good clarity on, the overall market big picture. There's so much noise and news in the market that you can kind of get sidetracked. So it's good to kind of ground yourself, and this is a great way to kind of do that in what I call top-down market analysis. So first off, what we used to do, we didn't have, all the good technical charts and everything. We would just basically use fundamentals when we're trading all the different energy sectors. So we would look at a lot of different fundamental data, and then we do the kind of big macro picture all the way down. But now we have some fantastic charts. So what I like to do is we'll go to the September, first I'll go to the monthly time frame. I call that the big macro picture. And so this is the S&P 500 SPX. Now, this is very interesting. I just noticed this actually because that we're getting a cycle reversal on the monthly. So this has been an unbelievable trend up. And you can see we're starting to lose momentum here. See that? See that this is my cycle reversal indicator. So that is a pretty big deal right there. So you can see the last time we had this was back here. Now, typically when using this indicator, it's a great indicator. You'll see 1, 2, and then when I see that third one, that's usually when it rolls over. But this is a really big first signal that this thing could be getting some exhaustion on the buy side. And that aligns with seasonality. So pretty amazing. All right, so that's the macro picture. We're starting to stall out, and we're starting to kind of show some buying exhaustion just from that macro monthly time frame. So then we break it down. I like to go to the next time frame, which is the weekly. I call this kind of the long term. Again, cycle reversal, okay? And we're starting to get momentum starting to come off. See the momentum here on cycle 1. Now, the other thing we'll look at is, these are what I call, these are extreme range bands. So these are based on average true range, and here's the weekly. So here's a really a great indicator that I use, and you can see here we're up at that 3 ATR, so very, very stretched, and we had a cycle reversal coming from very overbought on the weekly. So this was a great place to, last week we were looking at credit spreads and things like that. So now the money, and we actually did a short trade on Friday. We'll see how it goes into Monday, but we're getting that cycle reversal here on the weekly. So things are starting to exhaust on the buy side. So these are things that are pointing out, and then we go down to the next time frame, the daily, which is what I refer to as the medium term, and you can see it's really starting to break down. We've got cycle reversal, one here, then we had another one, and now we're getting cycle 1 and 2 go negative right here. So we've got breaking the 21 EMA, so there's big potential next week to move down, potentially down to this 50 simple moving average here at 5,400, which would be 540 on the SPY. So that's kind of a look there. So be aware of these, things that are happening, and they're also starting to align with the seasonality of the market based on seasonal trends. So let's take a look at some seasonal trade examples to kind of show you how these can work for you. So here's a seasonal trade that this was came up in May. Okay, so I just kind of want to show you one that has already come about to show you how these statistics are just pretty amazing. So these are the seasonal statistics I use, and so you can see this is everything that was highlighted for May. Okay, so there's anything from copper, there's just all kinds of things. RBOB, gasoline spreads, bonds, soybean, platinum, natural gas, corn, NASDAQ 100, Canadian dollar, cocoa, live cattle, wheat, Swiss franc, soybean, feeder cattle. Okay, so there's all kinds of different asset classes. But then what I like to do is then you go through the ones that you're familiar with, that you like, and there's always maybe something that'll pop out. So here's really a good one. Here's the NASDAQ 100. So we can look at that. This is based on the futures, but we can use QQQ, right? So here's the NASDAQ 100 E-mini, and this is like this is the September contract. And so this just highlights, based on this data, just the seasonality. So if you were to buy, this is going back for 15 years. See here, total years, 15 years. So if you just bought on the 24th of May blindly, and then you sold on the 29th of July, just using the seasonal data, that was a winning trade, 100%, 15 out of 15 years. 15 years a winner out of 15 years. Now, it shows you here just the average profit. This is the NASDAQ 100 futures contract. So average profit, over that 15 period, $10,000. And here you can see the average profit per day, $163 over, 67 days. So some really good statistics to start with. So that's one that, pretty much highlight there. And then there's other, I like to do, with the energy side, there are things like RBOB gasoline. Here's that. And that's 80% winning rate. So 12 out of 15 years. Okay, so you can pick and choose, what you're looking at. Here's one that was a July platinum, So the metals have had a great run, and here's platinum, 14 out of 15 years. And then we can, dive down and break it down even in more detail behind this. So here's this NASDAQ 100 September trade. And you can see here, diving down into it, here's your, percentage of correct winners. And then you can see here, average net profit per trade was $544. So then you can see the years, going back. So here's 2023 all the way back to 2009. So here's the, entry buy date that they marked the seasonal entry. And then you can see where the price was. It was 13,809, this being the NASDAQ 100, and then exit on the 28th of July at 15,847. So you can see that price increase there. So the profit then, based on this futures contract was over $2,000. It'll show you the profit amount, best equity, when that date was, best equity amount, worst drawdown, et cetera. So there's a lot of good stats, but this is the one thing that I like to look at. And then we can, you can kind of get ready for the potential for this to reoccur. Now, sometimes, this one has reoccurred for, 15 out of 15 years. But what happens is, maybe it doesn't occur 1 year, or maybe it occurs earlier or later. So that's where I like to then apply and align my momentum and cycle indicators to help give you a better timing into, a specific, thing that you're maybe looking at. So this would be like the NASDAQ 100. By using my indicators, it's going to help give you a better entry or maybe a better exit. In some years, you may not have to trade. So you want to align the two together. So it becomes really a great kind of formula to use. So here's a little, additional background on that particular trade. You can see it starts here, it marks right here, right there. And then you can see this yellow is that kind of period of time. So you can see how it just kind of trended up. So that was a pretty strong trend of that one, in May on the NASDAQ 100. And then here's just some additional really good information. You can see here going back to 2007 where it started here. Here it was, back in 2013. You can see these different periods here. So you can see how strong that seasonal trend has been. It's marked right there in this kind of gray area. So some pretty strong seasonal data there for, the NASDAQ 100 in that time period. And then here's just, put this on the NASDAQ 100 NQ, and you can see here, this is this yellow line here marks where the seasonality got in on that specific day right there on the 24th. So it got in right here. Now, by what I wanted to point out here, by using our seasonal not indicators, but our momentum indicators and reversal indicator, we would have gotten in, anywhere from right here where we had the seasonal cycle reversal, not seasonal, and then I had positive momentum here, and I've got a moving average cross. So this would have been the perfect entry. This is when we would have gotten in. But what I like to do is that, look at this seasonal data. So if you think, okay, this one is 100% of the time going to, over the last 15 years, and it tends to happen here on the 24th of May, what I do is put that on my watch list, and then I'll start monitoring this, 30 days or maybe further out or before this period of time. So I'll start looking at this in end of March and early May or early April, and using my indicators to kind of align with this potential seasonal trend coming up. So, could end up getting in earlier, or maybe it doesn't happen, you get in later. But here would have been the entry that we would have put on based on the indicators, would have been right here. And at that point, it was trading at 17,859. So, kind of to relate this to QQQ, this is what it looks like just with QQQ. So would have done this, most likely with the QQQ ETF contract, and it would have, we would have been in right here on that reversal, cycle reversal up here, or right here where my momentum indicators confirm that. And so right at that point, that was trading at 435, the NASDAQ 100 at 435. Now the seasonal, stats got in right here, marked the trade getting in here, so at 456. So you can see the better entry. So that's what I like to do. So the seasonal data says, okay, there's a strong seasonal trend coming up, but then I use my cycle model momentum to navigate the entry, of that signal coming up. And so we would have been in here, and then out. You can see here, this red line is, the point where, would have been out of the trade. So you can see here, just following the momentum up, it came into this area right here and started kind of churning sideways. But then it came down and held the moving averages. So what you can do, and what I like to do, is try to, if you're catching a seasonal trend, you want to try to stay with the trend. So that's the 8 exponential moving average. So it kept sticking right on that. And then it broke back above that. And then cycle reversal, momentum shift. And then right here, it started breaking down. So that would have been, the ultimate exit right there. So 486, and then, out 486, and out there in at 435. So that was the potential, that was there. So that's like a $51 per share move from this level to this level there. And so if you did this, with an option contract per 100, that would be, $5,100. So these are the kind of things that you can incorporate to kind of, really help your trading and see this, potential for these big seasonal trends, which we're all looking for, right? Or big trends rather than just the chop of the market in and out, in and out. Yeah, so the seasonal mark was right here. So the question was, where was the seasonal? Okay, so it was right here. Okay, that was the seasonal entry right there on the 24th of May. Okay, so then I know that's coming up. There's been 15 out of 15 years or 13 out of whatever it might be, but it's a potential for a big seasonal trend. So then I start looking, 30 to 45 days before, knowing that that potential trend is coming up. And then that's going to be a better entry using our model. So here's your cycle reversal here. And then we had momentum shift up. So there was the really perfect place to get in, knowing that there's potential for a big seasonal trend to kick in and accelerate this, giving you support to your entry. So you're not blindly doing it. You've got another potential reason for, getting into this trade, because it has a very strong seasonal tendency, 100% or 15 out of the last 15 years. Okay, so that would have been the seasonal entry. Here was the system entry. Here was the system exit. And this, let's see, I think it's actually, yeah, see, it's still in the trade. See that? That's the other thing. So I don't just rely totally on the seasonals. I use the seasonals as the kind of step to look at potential big trades coming up. But then I use the indicators for the entries and exits. So you can see here, just market on the seasonal. They just mark it all the way into the end of July, which aligns with that seasonal pattern. Look at that. So here's the NASDAQ 100 right there, July 28. See that? The indicators are not seasonal. The indicators are momentum and cycles, okay? The seasonal data is right here. These are just seasonal fundamental data. There are no indicators with this. This is just the seasonal patterns based on reoccurring, based on the kind of the algorithm of the seasonal data. The indicators that I use are not seasonal indicators. They're built on momentum and cycles based on this lower cycle reversal indicator, okay? So the model that I use is momentum based and based on cycles, okay? But then when you align that and add seasonality, you can then start watching, put together a watch list of things that are coming up that are potentially very strong seasonal trends, and then you can catch the trend, catch the wave, with the trading model. Okay, so that's the kind of the combination. So the seasonal trend gives you the bigger overview of the big picture, something major that that potentially is coming up. But then to really, finesse the entry and the exits to optimize your trade, I use my momentum and cycle indicators for the entry and for the exit. Okay, does that explain it better? Okay, so that's the combination. And then here's the QQQ, on a monthly. So you can see now this is market based on again the seasonality. So you can see here it got in right here. This was back in 2019. Here it is 2020. Here it is 2021. So you can see that's a pretty strong trend, right? Pretty strong seasonal trend. Which seasonal data I like best? Well, I'm not sure I understand that. The seasonal data, this is the seasonal data I use, which I'll talk about a little bit more in a bit. But I use this seasonal data to give an overview of things that are potentially coming up. Okay, so I'll get this for May. Every month I'll have this for 2 months going forward. So then you can kind of review and think, oh wow, looks this will come 60 days early. Okay, so be looking at this like in April or March or April, and I can see, wow, look at this. When May rolls around, we've got, or this is the trades for May. So this is May. You can see that, well, there's potential for the NASDAQ 100, to have a big, huge move up from the 24th of May through the end of July. So then you just put that on your watch list. You start monitoring the trade, and you can catch that trend either a little bit early. A lot of times they might start a little earlier. Sometimes they might start a little bit later. But it shows you what's potentially coming up based on statistics over the last 15 years. Okay, so that's the big part of it. These over the last 15 years. So it gives you something to work from. Okay, gives you something to really work from other than just the noise of the market, all the different talking heads, everything else. So you just filter that out, concentrate on that, see if it's going to come. Now, maybe 1 year it's not going to come, or maybe 1 year it comes earlier or later, but it's there, and that there's that potential. Okay, so that's kind of a good example of just the seasonal price trends of something. Now, before I get down further into this, I'm going to actually be doing a really in-depth course this next weekend, next Saturday, the 27th of July, 11 a.m. to 2 p.m. Eastern. We'll start, however long it takes, then we'll finish up on Monday, the 29th, from 4 to 5. So I've got a really great package. This is going to be just a full-blown course on seasonality, how to trade seasonality, all the statistics, the resources that I use, how those are used, how to analyze it, and then using option spreads and pairs trades to do the trades, and our cycle reversal indicator and some tools there. So if you'd like to join in for this, here's let me give you the link here real quick, and then we'll move on. But let me kind of give you a full little description of what we'll be doing here, and then we'll move on with the rest of the presentation, and then I'll cover this back again. But it's summertime. You do need to take off early. Here's the link for it. Please do join us. And so using this link, powercycletrading.com/special, and then use the promo code right here. You can see it right here. It says CSEA small cap. Use small cap 15. That's going to give you 15% off of the price. So the price of the course is $197, and then it's got course package 1. It's got a lot of great bonuses, which the value of the whole thing or package is over $3,300. The price is $197, but if you use this special link here, powercycletrading.com/special that I just plugged in, you can click on that or copy and paste it, and then you use this promo code. You'll see a place where you apply that, put C15, you're going to get this price today at $167, 50% off. So basically a 95% course discount off that package. Okay, so you're going to get all this goodies right there. I'll go through later what are in that package, and so you're going to get it today at 167. So I hope you take advantage of this and join us. Now this also comes with going to come with 2 indicators that are going to help you for your cycles up and down. So you've got that indicators, a lot of tools, and some other great stuff. Now then, if you wanted the other package too, this is going to be in combination with my alert service. And so you'll get my alert service for the next 4 months. You can start and stop whenever you want. Also here, you'll get my trial membership to my trading club for 30 days, which you can start when you want. But this package is for the alert service. So for 4 months, you get all 5 of my alert services that I have. And the price today, if you use that discount code, will be 507. All right, so you get the live course, the indicators, all the bonuses. And then the 4 months, the alert service, all 5 of my alerts, 4 months, my trading club. So put that in, and then we'll move forward. But let me just make sure you see how to. So click on that link. So if I click on that link, this will come up. You'll see this pop up. Make sure everybody is on the same page here. And then come down here. You can see that use promo code SEA15, that's going to give you 15% off. And then you can see here just kind of a summary of what you're going to get. So with this package, you're going to get the 4-hour live course, or however long it takes me. And so that's the value of $1,600 there. So you're going to get the course. The price is $197, but use that promo code SEA15 small cap, and you'll get this for $167. And then all the different additional bonuses that you're going to get that come with this. You'll get my cycle reversal indicator. You'll get my opening range breakout indicator. You'll get my Fibonacci price target mapping. This is what we use to set out our price targets, where we think we're going to go up or down. You're going to get my additional, this course will involve pairs trading for some of these spreads. So you're going to get also then my prior course that I did on pairs trading. And then you're going to get 2 months to the seasonality vault. So this will give you all those seasonal statistics that I showed you, and we'll go over a little bit more here for the next 2 months. And then if you stay on as a member, you'll get those each and every month as part of your membership fee, a part of your membership package. So you'll get that. And then if you do package 1 here, you get the 30-day trial membership. And then we'll do a live follow Q&A support for this course. And then you're also going to get my futures trading commodity guide. So a lot of great stuff that comes with just the course here. Okay, so total of this total package is over $3,000. $197 will be the price, but if you sign up today using that link, you'll get this for $167. All right, so you just go down here, make sure everybody sees this, and it's just right here. Now, the indicators that you're going to get for the course, be good for Thinkorswim, TradeStation, TradingView. And so just click on this Buy Now. And then this will pull up the payment link. And you come down here, put that SEA15, small cap, make sure it's small cap, 15, hit apply. That's 167. Now, if you want my momentum indicators on top of everything else, you're going to get right here. You can get this if you add this to your order. When you're placing the order, you can get all my indicators, the volatility squeeze indicator, my momentum indicators here for just additional $195. And so those are available. Thinkorswim, TradeStation. So click on that if you want. Add to the order. And then, your promo code, and you're good to go. So that's course package 1. And then if you want it with the alert service, which comes with for 4 months with all 5 of my alerts, you can do that right here with this different link. So you can see just kind of a summary of all the alerts so far, combination of all 5 services. I started back in 2018. You can see we're currently, we're running around 79% win rate. So Here it was through yesterday, 755 trades closed out, 545 winners, 50 break even, 160 losers. Now these are unaudited, but this is kind of a summary of all these trades of the different 4 alert services that I will send out. So you can kind of see the different ones that I will send out will be what I call text alerts for breakout reversals or credit spreads. Then I do text alerts for selective counter diagonals, text alerts for selective butterfly long condors, and then selective earnings trades based on options, typically different option strategies. And then what we do called monthly penny trades. So there are 5 different kind of category of alerts that can be, pumped out or sent out to you. So you'll get this 8 to 12 stocks or ETFs per month, typically, trading guide, trade setup videos, trades are listed archive, and this also includes the trading club where you get the weekly Q&As every week for the next 4 months, market newsletter, video, trading room, coaching there. So I have virtual trading room open every day from 8:30 Central to 9:30 Central, and then discounts on anything on my website, courses or trading software. So that's the course package there with the alert service if you want that, which has been very, very popular because the alerts have been doing really well. So get that plus the trading club membership and all the good, benefits there. So it's $597, but if you use the promo code here, C15, you'll get your discount off of that. It'll be $507. And then if you want to renew, you can. Hopefully you'll stay with us. So just use this promo code C15 and you get this today for $507. And there's a 2-pay if you want it. Plus, I would add my indicators, my momentum indicators and cycle indicator here if you want. All right, so that's just a quick review, and then we'll come back to that a little bit later if you have questions. Do the alerts cover agricultural commodities, oil, metals, currencies? No, the alerts that I send out are going to be based on just equities and ETFs, okay? So the course, though, I'm going to teach you, though, how to, use the data that you'll get in the course, all the seasonality statistics. I'm going to teach you in the course, then, if you do want to trade commodities or oil, things like that, how you can do it and the spreads, how to do that. But with the alert service, I just can't, I don't have the time to do that much, So I'm focused with the alert service on stocks and ETFs because the liquidity and, if I had more horsepower, more people, I could do the commodity side of it, but just so much you can do. Okay, so let's take a look at some seasonality trades using spreads and momentum. Now, why would you trade spreads? So, spread trading is a great way. I've been typically, over my whole career of trading, we basically would trade spreads, especially on the oil side, because we were a big trading company. Like I said, we were, one of the largest oil trading companies in the world. So what we do, we trade literally thousands of spreads. And the reason we would trade spreads is a number of different reasons, but here's a big part of it, is that they're basically a market neutral strategy. So, that seeks to neutralize certain market risk by taking offsetting long and short. So like hedge funds are called hedge funds because they're long short. So, in an instrument that with an actual or theoretical relationship. So what we would do is we would trade just literally thousands of spreads. It could be crude spreads, timing spreads. It could be gas to crude, could be distillate to crude. It could be different cracks. It could be natural gas spreads. And so it just, what it does is it reduces your capital at risk, neutralizes your kind of directional risk, because you're just playing the relative strength of one asset versus another that's correlated. So it's a great way to trade, and then also reduces your margining requirement as well. So basically the way it works is, as long as whatever you're trading, your stock, or it could be a commodity, futures, whatever, but as long as the stock or security you buy outperforms the security that you sell, you're going to make money. And the bigger the outperformance, the obviously more money regardless of market direction. So the market could be going down, but if you've got a spread that's a relative strength of XYZ is stronger than, you know, ABC, and it's going up, it doesn't matter if the market's going down. So this really makes spread trading or trading pairs a fantastic way to make money without taking the broad market risk. So it makes you sleep a lot better too, you know, where you know that you've got a neutralized kind of trade that's not really, doesn't have to, you know, rely on the direction of the market. So for example, here's just kind of a way to look at it. So for example, if you had like say stock A and you've got stock B, and they're very correlated, they kind of track each other a lot. So if that correlation though weakens temporarily, and you have stock A that moves up and stock B moves down, so a lot of times earnings will make this correlation change, right? So you might have, you know, like for example, you know, Apple or something, you know, had a really strong earnings or really weak earnings that could really deviate some from something that's correlated to like QQQ or XLK. So that's kind of an example. So, but you know, you get this weakness, but it's temporary. Sometimes these kind of temporary weaknesses though can add or last, you know, 2 to 3 to 4 months, and then they'll finally kind of revert back. So here you can see they kind of diverge. So stock A though gets stronger, but stock B that's correlated to gets weaker. So see that spread widening? So the spread is widening. So even if the whole broad markets were going down, you still might have, well, stock A is going to be stronger, even if it's going down, you're still going to make the money. So you don't have to rely on the direction of the market. You're just looking at that correlation. So here's a great example. So let's say, and we'll say Apple versus QQQ. So Apple had good earnings, you know, and so it broke its relationship, its correlations tied to QQQ is about, you know, about 80, 85% correlation coefficient, but it broke and it started running. So what if, you know, Apple goes up faster than QQQ? Okay, so, you know, Apple starts going up and QQQ doesn't go up as fast, but Apple's really going up a lot faster, right? So that spread widens, you make money. But, you know, what if the Apple goes up, but QQQ goes sideways? So Apple goes up, QQQ goes sideways. You're making money. See that spread widening? Also, what if Apple goes sideways, but QQQ goes down? You're making money. See the spread widening there? So that's what you're looking at. Or you could have Apple go, you know, start declining slowly, but QQQ is declining faster. So the spread there, and then, you know, Apple goes up and QQQ goes down. So those are 5 different ways to make money versus, you know, if you're going to, you know, go long something, you have to have it to go up to make money, or short to go, you know, make money to go down. But if you're spreading, you basically have 5 different ways that you could make money off of the spread versus just having to be solely reliant for the market direction. So here's some seasonal spreads. Here's an example here. So this is kind of one that I like a lot, and we used to do a lot of these also when, you know, I was running the trading group. But this is what we call the gasoline crack. So this is in this example, this would be going long the July RBOB gasoline. So let's say we'll say you go long one RBOB gasoline contract, and you sell it against it the July crude. Okay, so this is the July gas long, July crude short. So a lot of different things we can do, but this is one to highlight to show you. All right, so you can see here, the entry date that they mark on the seasonal spread is the 16th of April, and then out the 28th of May. Now this one has been, I mean, sometimes these are, you know, will be 100%, okay? But this one, in this time frame, the April, these were the April spreads that came up, you know, this April period. This was what came out when they published it. So this one was the RBOB. Okay, so this one though it's been a winner 13 over the last 15 years. So it'll give you all the inside stats, and you can go from there. But you can see the average profit $2,700. Here it shows you average profit per day over 4 days 64. So a lot of good stuff there, and there's just more here. You can see here's here's 93%. This was like going long July soybean, short July wheat. So a lot of different ways to play it. But this was one that I liked, and it's pretty high reliability factor, what I call reliability factor. Now, sometimes you're going to have 100% trades in here, but this one was 87%. So here's what the trade would look like using the system, the momentum and cycle system. And this is going long July gasoline, which is called RBOB, contract short July crude. So based on the spread entry, the model that I used, based on momentum and cycles, would have been in on the 9th of April and then out the 14th. Okay, the seasonality data is at 87%, winning reliability, 13 out of 15 years. But that's why I was saying earlier, I want to use my cycle model to time it, right? So here's the inside statistics. So here you can go back all 15 years, and you can see every specific year here. So this was back in 2023. It entered on the 17th of April, and this is per barrel. So that says 3,242. So this would be like $32. I'll show you how this works in a minute. So this would be $32 a barrel. At that time, gasoline was trading at $32 a barrel above crude oil. Okay. Now, 1 barrel of crude is 1,000 futures contracts, so that's why it's 32,442. So that'd be, just make it easy, $32,000. Okay. So you get one oil contract is equivalent. If you have one oil contract, 1 barrel of oil, that's like 1,000 futures contracts. All right, so then it goes out right here on the 26th of May, and it was at 36, just call that $36. Okay, so this was up $4,122. All right, so you can see how that works, and it shows you the best equity date, best equity amount. It'll even show you the worst equity date, worst equity amount there. So some really great stats. So then you can see which year was a loser year. You can see this was back in 2017, had that loser there. And then you had a loser back here in 2013. But with the system, with the momentum and cycles, typically we're not going to have that loser, because the cycle, if that particular year, if we have time, we can go back and look. We probably didn't have an entry based on the cycle model. I'm going to write that date down, and we can go back and look. We have time. I'll just go here. Let me mark that 2017. 2017. So in the 17, out the 26. Okay. So typically we're not going to have these losers, and we're typically going to get a much better entry and a better exit. So you can kind of see the stats going back here. Here's, going back, just kind of show you some of the goodies that show you here. Here it goes back, like here's 2011. Here's a 2010 area. Here's that one loser right in there, winner. Okay, so you can see these stats here. So that kind of outlines, gives you kind of a little outline there. And then here's the seasonality continuation chart. You can see how potentially strong this can be. So this is July RBOB gasoline minus July crude. And now here would be, you can see where the trend starts. It really starts right here in the early part of April. Here's where their seasonal data started or marked the trade. So you can start these things, you can get in early, sometimes, but this is a very potentially strong seasonal trend. So that's one I always like to look for on that. And then let's go through this here. Well, let me see here. Here, let me pull that up. I thought I had this on here. Here's the chart. So I want to show you this. So here's this is my seasonal, this is a spread, okay? So this is what's called a line chart, okay? So this is just showing you, this is, if you can see right here, it says 42 times RBOB N24 minus CLN24. So what this is, this breaks down, this takes a gallon of gasoline and converts it to 1 barrel of crude. So that's why it says 42. There are 42 gallons in a barrel of crude, okay? So here, so that's how we would do the spread. And in the course, I'll teach you all this. So the system would have gotten in right about here. See that cycle reversal right here? And then we had positive momentum. I like to look at that. So right there would have been the entry that we would be looking for. Now we know that there's potential for a strong seasonal trend. And this is actually where that was entered this go around. Okay, so this year, this was not a winning trade. All right, so the seasonality trend was marked here. You could see it would have gotten in here and it went down. So this would have been a loser. Now, you know, like I said earlier, we look to, I start monitoring. If you see a really strong seasonal trend you like, then we start looking 30 days to 45 days prior to see a lot of times these seasonal trends will start early or late. So here, it started earlier. So here, if you'd gotten in right there based on the system, that was going to be at that point that gasoline was trading at $29 per barrel over crude oil, okay? And then it goes up here, and here would have been the exit. So like here it starts breaking a moving average and we start getting negative momentum. See the cycle reversal right there? And the momentum starts going down and it breaks that moving average. So the exit would have been right here, right there. So that would have been at $30.50. All right, so that's if you take that, that's per barrel. This is all per barrel. And like I said, I'll go through more detail in the course how this works. So if you got out at $30.50, gasoline at that point was over crude and your entry was at 29, okay, that's $1.50, right? That's $1.50 per barrel. Now, for every barrel, if you have a barrel of crude oil or a barrel of gasoline, that's equivalent to 1,000 futures contracts. So actually, if you had 1 barrel, you control 1,000 futures. So this price, you would have been here. Actually, if you did one futures contract, you'd be up, one oil contract, you'd be up $1,500, okay? So if you did one futures contract, that's the multiplier of 1,000, so that's what you'd be up. So these things can be very powerful. So you can see the hedge funds, I mean, this, if you did it one contract as an individual trader, you could do that, no problem. Now, the big, hedge funds and the oil companies, they'll do thousands of these. So, if this, you make one contract and make 1,500, if you did 10 or 100 or 1,000, you see the potential profits are huge. That's why they're so big in it. Now here would be the other entry right here. So then you can see it came up. Now this is still actually in the trade. So you can the best thing to do is just trade it. So the seasonality data will mark it and stay with it, but you can just trade the trend. So here would have been another entry right here. Cycle reversal up here, momentum. So here would have been the next entry, almost the exact same price, $29. Goes up here and then it breaks here, the moving average. Momentum's going down. It would have been out at 30.31. So this one you would have been up at $1.30, so $1,300. Okay, so these are just the way that you can do additional different types of trades if you want to pursue some other things to do. Yeah, one contract's equivalent to 1,000 barrels. That's right. One futures. Yeah, that's right. I think I said it backwards, didn't I? So if you buy one futures contract, you can actually, you're buying a physical, you're actually, if you buy one futures contract, you're actually controlling 1,000 barrels of oil. Or if you buy one futures contract of gasoline, you convert that to barrels, you're actually controlling 1,000 barrels of gasoline. Right, so I think I said it backwards, I'm sorry. So you got one futures contract equals 1,000 barrels of oil. So that's pretty cool. So if you're trading oil you're physically, you can take delivery of it. If you bought one futures contract, you're owning 1,000 barrels. So if you wanted to, there's a nomination procedure that you can go through. You can actually, if you've got a place to put those barrels, you can actually take physical delivery. And then yes, so 42 gallons. Now, so the way it works is you've got there are 42 gallons to a barrel of crude. Okay, so 42 gallons to a barrel of crude. So times 1,000. So that would be if you did this conversion. So you're doing 42 times, that's 4,200. So what we do is we just convert it to barrels. Okay, so when you're trading these, we just convert to barrels. So here's your multiplier. So 42 gallons per barrel. Okay, so 42. So we've got a gallon of gas, a gallon of gasoline. So we want to make that, apples to apples. So we multiply it by 42. So that converts it to the multiplier of a barrel. So that would be the equivalent of you owning a barrel, but you multiply it times 42. So that's what gives you the conversion. So then you're doing apples to apples or barrels to barrels. So this is then converted. So now you're long that gasoline at $29 per barrel over crude. And then, that's how you can track it to see what you're going to make. Yeah, that's right. Okay. So, yeah, so, 42,000, 4,200 or 4,200. And we just convert it like that to make a dollar equivalent. So you'll learn all this more in detail in the course, but that's how it works. Now here's just an example of a spread example. So this would be just going long QQQ, short the Russell 2000. And this was based on the cycle model momentum entry on the 6th of March, out on the 19th of May, and profit per 100 shares. So this will show you how this works if you're doing spreads. So this is converting, this is making what we call a dollar equivalent. So, QQQ is trading at what, 435 or something. The Russell was at 200 or something. So to make it more dollar equivalent, we're going to do one contract of QQQ, but we're going to do two contracts of the Russell to make it more dollar equivalent. Okay, so we don't have that big discrepancy. So if you do if the market goes down, that's great because you're going to be short to Russell. But if it goes up, you want to make it more dollar equivalent, so you don't you don't have the dollar values change too much up or down. So this would be if you did this ratio. So you're long 1 QQQ, short 2 Russell, and you got in right here that spread at that point in time. You can see the indicators, cycle reversal here with momentum. That would have been the entry, just to show you how the trading model works great on these spreads. So that would have been the perfect entry. So that was at that point, that ratio was $76 under QQQ, 1 QQQ versus 2 Russell, 7,600. And then you see it just, that momentum took off, started really moving, tracked that moving average of 21 all the way up. And then here it started to falter. Right here, we get cycle reversal, momentum going negative. So potential out right there at 1630 under. So you can see how that spread really tightened up. It went from 7,600, now it's only 1630 under. And that's the great way, that's the beauty of the spreads, and you're not market directionally sensitive. So just kind of the easy, math here, then the pairs trade would then enter the 6th QQQ long, then short 2 Russell at that point in time on the exits. Let's see. Yeah, that was the entry. At that point, it was 76 under. And then on the 19th, now it was 1630 under. So look at the difference. That spread then increased $59.30 per 100. That's 5,970. So what we'll do in the course, I'll show you how then, to trade these spreads as a pairs using options to do the trade. So there are a lot of different ways that, you can do things, in your trading, but these are a great way to look at your trades and trade some additional different things if you're interested in doing that. So I just kind of want to highlight all this here today, and here's some stuff coming up that's on the horizon. So what we'll do is, coming up next is the August things that are going to be popping out in August. So here are the August stats that are going to come out, seasonal stats. And so you can see, here's one that might be worth watching here, would be to buy the S&P 500 September contract, but we'll use the SPY or the SPX. And you can see this has been a winning trade 13 out of the last 15 years. So 87% winning rate. So the seasonality marks that get in the 20th of August out the 7th of September. So there's one that I'll definitely be looking at. Now here's another one. If you're looking at T-notes, if you're doing something there, this has been a 100% winner. So this is actually selling the 5-year T-note. Things, there's so many different things you can do. But this one looks really good. I'll be definitely looking at that one. And so let's take a look at what it has looked like in the past. So here's the detail on that trade. If you want to drill down more, you can see last year it got in the 21st and then it got out the 7th. So made a little bit of profit, 43 bucks, nothing too huge on that year. The year prior it lost 161. So it had those two losing years. The year prior, 82 up, 36, 82. So you can see there. So this is the S&P. Now that's $36, and you can see the profit then amount, time for the contract. Then you can see was here it was up $2,187. So those are ticks, and here it was up, 4,100, 1,800, 4,100. But, I'll be, on this trade, if we're going to do this, we'll be looking to use SPY, because then we can use SPY, a nice, easy contract, and we can use options for the trade. So here's kind of a little background on the stats. You can see here, going back here in that 2016 area, nice push up. Here's another nice push up there. Very good seasonal trend. But then, we're going to align using the model for the trend. So let me pull that up real quick here. So we know that the seasonal trend is going to seasonality wise, it's going to be coming on the 21st of August. So what we're going to be wanting to do is then be aware 30 days prior that we've got a seasonal trend coming up. So you can see here, this is where we're coming off here, but you can see if we go back here to the let me go back to 2023. Here was the one that was in 2023 that we just looked at. So here it got in, the seasonality was in right here, the 21st. So that was yeah, right here. Here was the seasonality trade was right there. You can see a nice, actually had a pretty good move up. And here, what I like to use is not my daily and the 4-hour, but here you can see we started getting that shift really right here. We had that seasonality cycle reversal right there. That was perfect alignment with that seasonal trend. That was on the 21st of August. And then this thing rallied up and they marked it out on the 7th of September. So this would have been right here. All right, so that was not a huge winner, but a winner nonetheless, in that they were using the futures contract, so that's why it was more profit based on the futures contract than SPY. That's a look there. So what's coming up, and then there are just so many. It's just it's endless, and it just comes every month. All right, so that's what's on the horizon, and so if you'd like to bring this all together to capitalize on seasonal trends, we're going to use spreads, options, and option pairs in the course, and make sure to join me this coming weekend on the 27th of July. We'll start the course 11 a.m. Eastern to 2 or however long we need, and then we'll finish up Monday the 29th 4 to 5, and then we'll also have the Q&A dedicated to this. So this will be a 4+ hour course. Everything will be live, but then we'll break down everything in 30-minute modules. Yeah, with options, you always, regardless of what you're trading, question is, do futures have a time decay component? Well, if you're just long the futures, they don't have a time decay component, but they do have a time decay component, because every futures contract on oil anyway, they have a monthly futures contract. So at the end of the period, they're worthless. You either have to take delivery, or you have to get out, right? If you do one that has a physical delivery. So they do have a time component from that standpoint. So here's the course package again, and use this link if you want. This is the easy way to go. Okay, so use that link, and then you're going to get just kind of a review of everything you're going to get. We're going to get the course itself, will be $197. Use that promo code C15, and today you're going to get it for $167. But you're also going to get all of these tools. You're going to get my stock reversal indicator, and you're going to get this, a really cool indicator. This is the opening range breakout, high-low breakout indicator. So you're going to get that. So these two come with the course. Just I'm just trying to provide you the stuff that's going to help you be successful, with this and with all your other trading too. These are great tools that you can use with anything. And then you're going to get my price target mapping course. So if you go to the website, these are the prices on the website. And then I'm going to give you my pairs trading course. Then you'll get 2 months to the seasonality vault. Okay. And then you're going to get, if you stay a member, you'll get this each and every month. So you can kind of follow the seasonal trends that are coming up on your own. And you'll get a 30-day trial membership. You can start this when you want. So, if you want to wait till after the course or whatever, and then you'll get that. And then if you do continue, it's $97 a month, or we have other packages that you can use. Then we'll do a follow-up Q&A, which will be dedicated to this course. And then you're going to get my futures trading commodity guide, which is a value of $47. And then you're going to get, everything is broken down in 30-minute modules or less. So full course package, the bonuses are come up to $1,700, and the value of everything is $3,300. And using the discount, you're going to get, it's $197, but you use that discount today, and huge markdown. All right, so make sure to take that, and then use that C15 for your promo code, and you'll be good to go on that. So that's course package 1, and then package 2 comes with, if you want the elite open and close alert service. So with this one, you get all 5 of my trading alert services for the next 4 months, plus the 4 months with the trading club, which gives you the virtual trading room, video newsletter every day. A lot of that benefits. We'll go through that in a minute. But this course package then is everything in package 1, $197, but with the 4 alert services. So basically it comes out to, about $100 a month for your alerts. And so with this, you'll get my alerts that I send out for any butterflies or condors that I send out, any counter diagonals. So we do primarily a lot of these. These are 2 kind of the most that we do. Then any specific monthly pinning trades that are based on butterfly and calendars. Breakout reversal trades, a lot of times these are credit spreads, and then any specific, selective earnings trade. So those are the 5 different alerts that you may receive, and with the course. And you'll get, with the alert service, access to all 5 of the alerts, typically 8 to 12 stocks or ETFs per month. These 5 different selective alerts are sent out. And then I give out a trading guide for each trade, the alert that's sent out. I'll give you a good guide of the price entry, where it is. I'll give you a description of why the trade was done. And then I do a trade video review that night. I'll do a video of that trade, why it was, what I was thinking, why I did the trade. So kind of give you a little background on that. The trades are listed and archived. Then we'll do a weekly Q&A. So we have this for the next 4 months. And with this alert service, you can stop and start, when you want. So if you do go on a vacation or business or whatever, you can stop it. So you're not, using your time and start it back when you want. But you'll have it for 4 months and you can start and stop when you want. And then you'll have access to my virtual trading room each and every day for the next 4 months. So this is from 8:30 Central to 9:30, and then discounts of 60% off everything on my website for the next, 4 months. So you get we'll give you a promo code or a discount code for members, so you can get anything for 60% off. Yeah, so the futures, so the seasonality data is based on the futures contract, but instead of using the futures, you can use the futures contract if you prefer, but what I like to do is use the, the ETF or something like that. So if there's a S&P futures or NASDAQ futures signal, for seasonality, I like to use the ETF. It's just the members and everything are more familiar with it, and the liquidity is great, with the options, and so we just, go with that. All right, so then here's the the summary again. I showed you this earlier, but since starting the first service, this is a combination of all 5 together, or 4 together, basically. Started back in 2018 through Friday. We've had 755 trades closed out, winning trades 545, break evens 50, losers 160. So running around 79%, 80, trying to get up to 80 win rate. And these are unaudited, just kind of a summary of the trades. And then, we've got, again, make sure you use that promo code and use the powercycletrading.com/special to bring up that link. Makes it really easy then for you to kind of click on that, see what you want to, home in on. Now, with the course, we're going to start with the Seasonality Trading Foundation. We're going to go through and use the seasonal price history analysis, the data and stats that I use there, so you'll get access to that. And so we're going to go through the commodity futures, highly effective seasonality data. We'll go through the stats, how they're used, the resources, how to use it, and then how to build your, your watch list. I'll show you how I go about that and monitoring that. And preferably we're going to use stocks, ETFs, and commodity futures. I'll show you how to do futures on certain contracts if you want to do that as well. And this will be based on these seasonal statistics and our, reversal indicators and momentum. So to validate a seasonal trend and strength. So then, how to catch that seasonal wave using a cycle trading directional model and momentum indicators and the seasonality trading review. Then part 2, we'll go through the seasonality trends and tools used. We'll go in depth on the directional trading model, how that's used for the seasonal trend trades, directional momentum flows to confirm trend direction and strength, using that cycle reversal indicator for the advanced cycle reversal alerts on seasonal trend trades and seasonal spreads, what trading timeframes we're going to use, and then how to use your set up your profit areas using the Fibonacci price target mapping, which you get as a bonus in the course, and then also using your moving averages to track trends. So all this kind of is glued together to formulate a kind of process to kind of monitor and trend trade these types of seasonal trends. And then the seasonal swing trade entry rules, profit take and exit rules, and risk management. Part 3, bringing it all together, we'll go through spread trading strategies using futures and synthetic options, and then how trading spreads lower your margin, capital at risk, increasing your returns, and then how to analyze your trades based on margin or capital at risk. So this is a a lot of stuff that might be new to you, but it'll be really, really valuable information that you'll learn, a lot in this course about margining and using your future synthetic options for these types of spreads. And then we'll look at some, simple go-to option strategies that you can use. So then I'll give you the resources I use, the seasonal statistics, and an ebook on all about futures. So it's a really great course, a lot of good additional stuff to add to your trading. And here's like a little feedback from Jim who took it, said, oh my God, never expected to learn this much in a course. You open a whole new asset class to trade. Kudos to the quality that you've shown me, and I can drink from the hose, the fire hose, he says. Amazing course, Larry. This stuff I had no inkling about. It was like graduate school. Nobody else talks about this kind of trading, Lee. So with the course, I'm going to give you my cycle reversal indicator, okay? And this is good for Thinkorswim, TradeStation, and Trading View. Okay, so it's got a lower and upper study. So this is actually going to show you the reversals cycles when they come up, and when they come up to trade, and we can use this on our spreads as well. So that's originally developed the indicator for spreads. So this is the tool that you're going to get, as a bonus package. So here it is right here. There's SPY. So you can see this is the daily. We just kind of had that reversal here. But this is the tool that you're going to get. This is a really great tool for kind of managing these cycles. So you can just kind of see here, SPY just selling off hard. We get that cycle reversal, and then it turns the upside. Now, what I like to do is use my momentum indicators as well. So those are additional. If you want to get those you can get those on the upsell if you want those. They're $195, but I didn't put them into the course because a lot of you already have them. But if you do want the indicators, when you check out, it'll be $195. You'll see at the bottom if you want all the other indicators, momentum and the volatility squeeze, you can do that as an upsell. So just click on that. It's $195. All right, so take advantage of that if you'd like. But we're going to get, in the course, we're really going to be using the cycle reversal indicator. And another one is my opening range breakout indicator, which really helps you, it sets an opening range, and we use that for breakouts. So you're going to get that. All right, and then you're going to get this next indicator, my opening range high-low breakout indicator. So this establishes an opening range of the day. We used to use this a lot when we were trading crude. This is kind of how I developed this indicator back when we were doing crude breakout and reversal. So you can see it broke the opening range and sold off. So this is a really cool indicator. You'll get that as a bonus. Designed to capture explosive momentum breaks based on a daily opening range of your security. So when combined with volatility squeeze or other things, it's a great kind of tool to add. So you get that. Then the other enrollment bonuses, you're going to get my price target mapping course. So this is based on Fibonacci, moving averages. So it's basically 5 different things I look at to use for price target mapping. So the foundation of those Fibonacci, and then moving averages are added, aligned with it, support resistance levels, price action support, I call it, standard deviation forecasting, and then option activity. So these are the things that are involved to set these target maps. And this is a really detailed course on it. So you get that as a bonus as well. And we're going to use this in the course. I always use my Fibonacci target mapping for any trade that we're going to look at before we ever put it on, but this is how it's done. So you get that as part, as a bonus. And then I'm going to give you my pairs trading for market neutrality. So because we're going to be covering some pairs trades in the course. And so this is going to be much more detailed, a much deeper course on all that for you to dive into if you don't kind of want to concentrate on this. So you're going to get this as a bonus. So these are used by hedge funds to reduce directional exposure and or margin expense. So the pairs trading course, how pairs trading offer one of the safest ways to generate returns in an up or down market, best strategies for pairs trading to take advantage of market neutral, how to identify, select best pairs for your stocks, ETFs, futures, Statistical measures to measure correlation, how that's done, what resources to use for that, resources for your correlation on stocks, ETFs, and how to lower your trading costs using synthetic options, and easy to use high probability pairs, that the kind of the formula I use there. So really, really great course there that you get to kind of give yourself a head start on everything before we get into it next week. And then you're going to get 2 months free access to the seasonality vault. So I'd update this every month with the new seasonality statistics that are coming up. And I showed you kind of what's coming up for August. So you'll get that. It goes, it'll go 2 months forward. So when you get this, you'll have the current month and the next month out. So right now we've got July and August. Now when we get into August, then you'll have August and September. So every month it'll be updated. So you'll get this for the next 2 months. And then if you stay on as a member, you'll get this each and every month. So these are some fantastic little known seasonal research tools that you're going to use. 15 years of historical seasonal data, and the course will go over how it's used. All the charts showing, exactly when a seasonal trend ends or starts and ends across the different market sectors. And these are timing statistics that are, used, on an 85% winning trends and higher. So they mark it on their seasonal studies from 80% as kind of the low, all the way then up to 100. But I tend to focus just on all those that are 87 or higher, because there's so many that you can look at. So you'll get all that for the next 2 months for free, and then as a member you stay on, you'll have it each and every month. So here's just an example, October trades, etc. So you can go through that. I showed you earlier, the ones coming up for August. So natural gas, this natural gas was 100% winner. So if you want to drill down, here all the data behind supporting that natural gas. And then you're going to get a 30-day trial membership to the trading club. And with this, you're going to get, again, you can start this when you want. So you're going to get access to my virtual trading room, 9:30 to 10:30, Monday through Friday. So come on in, see what we're doing, or if you have a problem or need some help on a trade, come in and be happy to help you on your trades. Then I do a daily video newsletter each day after the close. So it tells you what I'm thinking on the markets, what things we're looking at, what potential ideas we have coming up. Our trading videos are archived. We do a weekly Q&A, which is live and recorded. Access, we have a Trader's Education Vault, which gives you additional trading educational stuff there. And then a 60% discounts on everything, courses, software on my website. So you'll get a member's code that will give you that discount on everything. And I always like to point out, this was Jay's been a member for a long time, but he said reading books is fine, but seeing the actual option trade setup makes a huge difference. And so, that's one thing, that plus you'll get from, having access to the trading room. And then we'll do a follow-up Q&A. So typically I'll do this the next day, so it's fresh on your mind, so you can ask any questions. But plus you're going to get the access to the trading room for the next 30 days, so you can come in there, ask more questions. And then I'm going to give you my futures trading commodity guide, so kind of a blueprint guide on futures, kind of the background, all the how futures work, etc. And then I'm going to give you my directional trading model tutorial on how the trading system works. So a lot of great stuff. And then last but not least, here's some examples of past alert trades if you're interested in adding the alert service to it. So again, use that special link there, and then you've got a choice of package 1 or 2. Now here's from Waleed. Waleed actually lives in Kuwait. He says, I have to mention one thing. I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing that I would like people on this webinar to know is when I get alert from Larry, I do it blindly, as time has shown me that this man is dead accurate in his recommendations. Thanks for the great service. And from Dan, he says, very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. Paid for my subscription with the first 4 trades I took when I was learning how to trade options. Please feel free to share. Now with the alert service, when I send out a trade, a lot of members just do their own thing. They just want the trade, right? So they'll just do their own thing. But when I send it out, I'll always give you a suggested option trade that you can use. So in detail of the trade, the entry level, profit targets we're looking for, these are going to be based on that Fibonacci price target mapping, various option activity, moving average, etc. What option series we're going to use, stop loss levels and guidelines, and I'm constantly monitoring these all day and giving you instruction if something needs to be done. So we'll, if an adjustment needs to be done, I'll send that out to you. Updates on the trade to let you know what it looks like from a profit standpoint. So kind of keeping you updated on the trade so you don't have to stare at your screen. Trades will be listed in archive, so you get the trades, you can go back and look at them. And then, so this is kind of a rundown of what you get, and then do a trade setup video review. So if we did a alert trade during the day, at night after the market, I'll give you in the video, I'll tell you more detail about that trade. We do a daily, then on top I have a video newsletter, so this goes into the market review of that, setups that are coming up, what we're looking at. Then we do a weekly Q&A, so you'll have access to the Q&As weekly, live and recorded for the next 4 months, and access to the virtual trading room for the next 4 months, 9:30 Eastern, 10:30 Eastern, each and every day, 60% discounts, Traders Educational Vault. So a lot of great stuff. If you want to go to the website, then you can see here all the different things that you can get with your discount. So if you want trading software, just click on that, and you'll see all the different things that I offer here. My scanner, volatility breakout scanner, so you can get this. You can come down here, you want that, you can see all the details. But if you want to buy it, you come here, and it's $397, but you get a 60% off. So you just add your promo code here, that'll give you a 60% discount off that price. So that's how that works. And then just anything that I have. So here's, if you want my directional trading indicators, now you can get these today for that upsell at $195 if you want those. These are great. Shows my momentum indicators, volatility squeeze. So really kind of a one-time great way to take advantage of that. And then my multi-time frame indicator, momentum flow indicator. I've got here's the opening range breakout indicator you get as a bonus here. So you get this one with the course. This was $197. If you use your promo code, you get 60% off. You'll get my signal trigger indicator. This is not with the course package, but that's another thing you can get. Here's what you are going to get: my cycle reversal indicator. This is just an invaluable tool here. So you'll get this. And then if you want any of my other option courses or any courses, just come over here to courses, trading courses, boot camps, and you can select here anything you want, 60% off of any of that. Okay, so that's all the goodies there. And here's some alert trades to go through. Here's some stuff recently. These are things that we've just recently done. So here are the butterfly condors. And we've been doing a lot of these lately with a lot of breakout trades. So started this service back, part of the service back in the May of 2019, and through yesterday we've had 176 trades closed out, 123 winners, 13 break even, 40 losers. Right about 77% win rate, unaudited. But these are fantastic because these are very low risk, $50 to $75 per spread risk. But literally you can get 25 to 1 sometimes, and we've had some trades where we've gotten close to 20%, or not 20, but 200%. So really great trades that I sent out here. So here's one that we did recently. This was Google long call condor. So you can see here when the alert goes out, this is kind of what it looks like. So this was one that was sent out on the 24th of June. It was traded at 179.26, and so sent out this doing a new Google long. I won't go through all the detail here, but you can kind of see. So sent this out to do this condor 180.82, 187.5, 190. So did that, sent that out. Then I'm constantly updating. Here was the 21st, the 24th, 27th, 28th. Google held long call condor, went out trading around 182. Profit on close. Spread was up 171. So I'm constantly updating these trades, to keep you posted. So here was the trade entry right here on the 21st. Again, based on momentum and our cycle indicator. We did an adjustment here, got out there. So here was the trade that was executed, doing a call condor. So long the 180, short the 182.5, debit spread, and then against it, short the 185, 187.5 credit spread. Sometimes we'll leg it, but a lot of times we just send it out as the condor. So the max risk on this was $72.72. Potential profit was $2.5 wide spread less your cost of the trade. So potential to make $178 or over 200% return. So, really low. I try to, send out very low risk, high return type trades that we can, do using these types of spreads. So went out right about here, almost perfect right there. This is the profit zone here. So went from $72. Now the spread blew to 243. So it was up 171. 237% return on that. So that was a look there. And then here was one that we did on net. This was a long call condor again. This was on the 14th of June. It was trading 75.40. Got out on the 18th. It was trading at 79.70. So this is one we did. New net long. So I won't go through all the details, but here's just kind of what it would look like when it comes out. I use a service called Telegram, so as soon as I hit it, it goes out within seconds. So here's what that looks like, Telegram. We did actually on Friday, did a trade on, we'll see how it goes. We did a short trade on SPY. So you can see here, I'll show you here. It says new SPY short. Trade around 550.20, momentum short based on the break below 550. So target 1, 542, target 2, 540. So initially we did this as a put debit spread, and then a little bit later I sent out an update alert to short a credit spread against it to convert this to a put butterfly. So did this and then explained why I was doing it to adjust to lower the risk and lower theta. So we adjusted this to put butterfly to 545, 41.37. As soon as this goes out within seconds when I send it out. So we'll see how this turns out. So that was what we set up on Friday. All right, so this was net one we did here. And so here was the trade setup, again, using the indicators. It's basically what I set these trades based on. So we had a cycle reversal here. Momentum starts to kick up. We got in right there. And we were in and out pretty fast on this one, the 14th and out the 18th. Okay, so this was doing with a condor, long condor. So this was, these are very low risk trades. That's why we tend to do them. 76, 78 call debit spread, $2 wide, and sold the 80, 82 credit spread against it. So spread width of 200 plus your cost of the trade. It was $51 debit. So potential make 149, 292% return if you get your max profit on that. And this went out, got out a little bit early right here. We got out right there on the 18th. Worried that this, can't remember what happened, but was worried this might drop back down or explode through it. So went ahead and took profit on that, and it was trading right here. So at that point, went from 51, it was $1.24. So up $73, 143% return, good return on your capital at risk. So that was one on net. And then here was another one we did on Meta. This was one we did on the 5th of June, straight at 490. And here was the entry right there. You see the same cycle reversal, momentum out there. So did this as a call condor. Been doing a lot of these lately with this big, massive trend up. Everything's been breaking hard to the upside, but we've been maintaining our risk by doing it this way. So that debit spread 250, credit spread against it, makes it a condor like this. So total risk $65, 250 on the spread width, potential make 185, 284% return on that. potential, okay, but we know what we have going into it. And then this one ended up perfect, max going out right there where we want it, right there in the profit zone right there. So it went from 65 to 250, up at 185 or 284% return. So I'm constantly monitoring these, and what we do, we'll, you know, if you've got multiple contracts, we'll scale out, we'll take a little bit, hold it, you know, things like that. Just kind of always keeping you posted on, you know, what the potential is on the trade. And then here's one I always like. I always love to look at this one. Here's one we sent out. This was on the penny trade. So this is one that we did based on that you know, pen trade, which is kind of what I call the binary monthly penny trade, where we set these things up for such a low capital at risk, but they have potential for a huge profit. So this was one that we did send out to the members on Tesla. So Tesla was trading at 189.35. So set this up. New Tesla long binary monthly butterfly option pinning setup. Trade around 189.35. Trade set for potential monthly expiration at 200. So buy this butterfly at around $12. Look how cheap that was. And then on the 16th, now it was up. It was trading at 200, right there to our target, and it was up $215 per spread, 1,791% return. And here it was at the close. Wow, almost perfect pin. Trading at 200. The butterfly now was trading at $230 per spread, up 1,916% return. This one was an amazing one. So that was one that was sent out. It's just and so our entry was here. Our exit was right there. So did this for 12 bucks if you got this on. So long the 197.5, 200, 200, 202.5, $250 wide spread, 12 bucks, 12 cents debit, potential profit 238. That would be 1,983% return. And it made pretty darn close to exactly that. So this thing went out right there, nailed it, pinned it. You know, at the end of the day, it was right there. Now, you know, you might have been out before or after, but that's where the trade did go. So it did do exactly what we were looking for it to do. So it went from 12 bucks to 250. So there's your $238 per spread, 1,983% return on that. So amazing trade. And then here, a couple of calendar. Here's just one to show you here. We do a lot of calendars of all the different trades. We do the most of calendar diagonals. So started this back in June of 2019. Had 290 trades closed out, 213 winners, 15 break even, 62 losers. Run about 79% win rate unaudited. And here's, we've done a couple recently, but we've been in and out of them so fast. We had a really good one set up on Exxon last week, but then the momentum shifted. We got out the next day with a, you know, we had some profit. We just went ahead and took it, and that was the right thing to do. So I'm going to just show you. So the last one we had actually was Exxon. We did a calendar diagonal. It looked really good. And we were up about $45 per spread. And then, you know, Friday, everything started melting down. So we got out of that one to lock in a little profit before it rolled over. So you can see we got into this one, I believe it was right here on the 16th. Or, yeah, we got into this one. This was Exxon. We did this one the 17th. And then the next day, it had this nice pop up. We took some profit there. And then Friday, it opened up here, and then it started to the momentum. You can see it just started to shift. So we went ahead and closed that out. But that was one we just did recently. But here's some other ones. Here's one that we had set up not very long ago. This was on Starbucks. This one turned out really good. So we entered this one as a put calendar diagonal on the 26th, and then we adjusted this trade into a free trade. So we adjusted this into a butterfly. So I'll just kind of briefly go through how we did this. So this one we initially set up as it was a daily cycle higher retracement reversal, daily negative momentum, 513 downside cross. So we set this initially up as a calendar. And then we adjusted this to make it a calendar diagonal. Then we did another adjustment here to make it a butterfly. And then here was the fifth, getting out. So just kind of constantly updating you. And here's the initial trade. We went short using what we call a calendar spread. So went short right there. Then we did an adjustment here to the butterfly, and then we were out here. Okay, we adjusted this to a free trade. So we were able to adjust this to a butterfly where we had no exposure, no risk at all. And so on the 1st of July, we adjust this to a butterfly, free trade. Okay, so these are things I'm kind of always trying to achieve, is to see if we can reduce our theta, reduce our risk. This one we were able to reduce to 0 risk, but it started out as a calendar, then we adjusted it to this calendar diagonal. Now this went out, this on the 5th, this went from 32 bucks to 142. So just the calendar by itself was up $110 per spread, or 343% return after the adjustment. And then we adjusted the balance to this butterfly, which turned out to be 0 risk. So we if you take the course or join us, you'll learn how to do this. But this was, we had the 12 July was the base long on the put side. So we were long that 77 put, sold against the 75, then sold a 75, 73 a bull put credit spread, converted to a butterfly, $2 wide. We actually ended up with a credit of $8 from the butterfly, so potential make $208 on 0 risk. So that's one that we did not too long back. That was on Starbucks. And here's what that was it. Yeah. All right. So here's where it went out, and right here went ahead and closed it out. So at that point it was on the 5th, and the expiration is on the 12th. But this was went ahead and took a profit. So this was up $75.47 or $78 there. So it went from 8 credit to 70, so $78 profit on that on 0 risk. All right, so that's everything. Any questions on any of this? And just one last review here. So make sure to put in that special link, powercycletrading.com/special, and then click on that. I'll just go through one more time with you, and then you'll see the 2 different packages that you can, order from. Use your promo code SEA15 small cap. Come down here. It gives you the description here. This should be 197, not 297, just to point that out. And then if you want package 1, which comes with all the, the main course and all the different bonuses on top of that, use that promo code. It'll be 167. So come down here, buy now, get the indicators. Now, if you want the additional indicators, you can do that here, just right there, the dynamic directional trading model. This will give you the momentum indicators, the volatility squeeze indicator, everything that I tend to use. So it'll give you all a lot of you already have it, so I didn't want to, have it on the course, get everybody confused. But if you want these additional tools, momentum indicators, the squeeze indicator, you'll get that. If you want to grab that right now, just add that to your order, 195, boom. Put your promo code in. And you'll get everything for 362. So that's course package 1, and then you can do the same if you want it with course package 2, which will be the alert service. So here's where you get all 5 trading alerts for 4 months, but trading club for the next 4 months. And a description of everything there. Come down here, course package 2, it's $597. But for today, if you want to join us and jump into it, use that promo code. Come down here. You've got a 2-pay. If you want to add the indicators, click those. That'll be for the momentum indicators to add on top of that. put in the promo code and punch apply. There's also to pay if you want it, and there you go. Okay, so I hope that's explains everything to you. And any questions or anything on this today? If not, make sure to sign up and join me this coming Friday, the 27th. We'll crank up and start at 11 a.m. Eastern and head towards 2 or however long it takes to get through the material I need to cover with you. And then we'll finish up Monday, the 29th at 4 p.m. to 5 or, you know, whatever time it needs to finish. And then we'll probably do the Q&A the following day. So then if you have any questions, you can come in and fire away on that. Okay, so appreciate everybody's time here today. And any other questions before we call it a day? All right. Well, again, thanks everybody for being here. And hold on. Oh, thank you, Richard. You're quite welcome. Appreciate that. I'll share that. That perks me up. I'm glad it was a good presentation. Thank you so much. All right, everybody, have a great rest of your day, and I'll see a bunch of